Hi, so this is video number 3 of Accounting Fundamentals. So the concept that we're focusing on in this video is the on account concept that we learned in video number 2. Okay, so on account refers to pay later. So we taught that term as vocabulary word as an overall concept of paying later. On pages 39 and 44 in the Southwest edition, 10th edition of the accounting textbook, you can find examples of on account as I'm getting ready to teach it. So there are two types of transactions for on account. You have bought on account and sold on account. So remember, we write on the board to illustrate to our students the importance of writing. When they see you write, they will write, and it reinforces the concept for them. Okay? So the transaction will either say bought on account or sold on account. So if it is bought on account, then that is accounts payable. If it is sold on account, that is accounts receivable. Okay. So at this point, I also start focusing on the importance of reading all transactions from the perspective of the company. The students must think of themselves as accountants for the business that's in the transaction. And the transaction that took place is from their business perspective. So if the transaction says bought on account, then their company or the business that they work for bought on account. If it says sold on account, then their company, their business that they work for, sold on account. They sold a product on account, or we bought a product on account. Either way, it's a pay later situation. So if I bought on account, that means that I went to Home Depot, I got a stack of lumber, and I told them I will pay them later. So I bought it on account. If I am a building company and someone says, hey, will you build me a house and I will pay you later? Sure. So I sold my services on account. I'm going to build today and they're going to pay me tomorrow. Sold on account. Sold it later. Okay. So in the textbook on page 39 in blue, there is an example. It says bought supplies on account from Canyon Office Supplies, $220. We bought supplies from Canyon on account. So our company is a customer of Canyon. We bought from them. We sold on account on page 44. Sold services on account to Main Street Services. We sold on account to Main Street. So we are their creditor, okay? Or a vendor of theirs, okay? So here we are a customer. Here we are a vendor, okay? Customer, vendor, okay? So when we buy on account, we use accounts payable, and the normal balance of accounts payable is, well, before we do normal balance, sorry, where it falls in the accounting equation, it is a liability. So that means the normal balance is a credit. So if we bought supplies on account, that means our liabilities are going up. They're increasing. So over here, we sold on account. Accounts receivable, that is an asset. because we exchange something that has cash value. So that makes it an asset. The normal balance of assets is a debit. And when we sell on account, our assets are going up and our accounts receivable is going up. Okay? So I usually have my students do like this little tree. Okay? So on account, bought or sold. Accounts receivable, bought on account, sold on account, accounts bought on account is accounts payable, sold on account is accounts receivable. We're either a customer or we're a vendor. Liability, normal balance is credit, and our liabilities are going up when we buy. Sold on account, accounts receivable, vendor, assets are going up when we sell. So that is the concept of on account. This is also information that your students need to memorize. They need to know that on account means to pay later, that the two transactions that are impacted by on account is bought on account and sold on account. And the two accounts that are affected when this on account is accounts payable and accounts receivable. They need to make sure they always look at it from the company's perspective. We're a customer here, so we are buying things. We're a vendor here, we're selling things. The the accounting equation impact is liability. The accounting equation impact is assets. Thank you.